Okay, I'm going to run through, I believe these are all weekly spot commodity contracts with Heikin-Ashi bars on here. And some of these popped up and I want to zip through these real quick here. I do have them sorted again by 3 months. Okay. Percent change. Let's see here. So crude oil and that palladium, West Texas, livestock, energy, copper, blah, 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 blah. And at the bottom end, cocoa, coffee, gold down here, and silver, right? Everybody's all giddier than cheese buckets. It's a cheese bucket. Whatever. All right, so we're going to run through these real quick here. Right. Okay, so what I have going on is some of these will come up as sub-indexes from Bloomberg, and it's just an eyeball thing because I don't have like thing hog or cattle prices on here, so I use the sub-index. All right, so here's Brent crude. Now, basically just a longer sideways pattern. Okay, this is coming off of the egregious high. Okay, so we're working on a sideways pattern here. Now on the unbalanced volume, you can see the oversold here, overbought up here. Okay, that I think is stochastics. I have stochastics on there. No, this is a MACD and this is stochastic. So if you follow that, ADX is turning up, and these are weekly Heikin-Ashi bars. Basically, as you know, I'm leaning on the short side. Friday was kind of interesting here, so we're either going to need some follow through here, okay, along with the breakout here, or it'll, we're back into this whole sideways gig here, okay. Lean hog sub-index, same type of deal here. It's back into the meaty area here. Hogs, this is extremely low price in hogs. They're pumping. Somebody said that the supply of bacon in the United States is at a 60-year low. Well, that would go along with nobody getting in the hog business, except for, I believe, previous videos I said get in the hog business. Because your costs are cheap, right? What's my risk? The hogs are free. You can slaughter them yourself and sell them to city folk. Make a lot of money. Fill up a freezer. Here, piggy. Okay, so that's just hogs type of deal. I figure it's going to continue on here if that's true about a bacon shortage. Though they were pumping out loins pretty good under $1 a pound, so there's nothing like getting those little loin roast things. Pressure cook that with a jar of green Mexican sauce kind of thing. Yummy. Carnitas. Yeah, that's right. Remember, Kevin took German and moved to Arizona. Thank you, guidance counselor. All right. I'm all ready for the Germans. Order a beer, get my face slapped. All right. Palladium. Hanging in there. Unbalanced volume is in there. The white metals have been doing better than gold. Silver is above its happy place kind of thing. I lean aside unless I see just a longer picture on this thing. It's a thin market anyway. These are weekly, and this says 17,000, so that may be for the whole week, right? Weekly, yeah. For volume, I'll stand aside. I like liquid. Here's the bodies in crude oil. Okay, so the unbalanced volume is just screaming with bodies here. Here was a washout. Here was another washout. Same type of deal here. The range is narrowed. So the deal is if the bodies are in here and it cracks below, you're going to get a washout. I'm not looking for 45. It's taking forever since we all know that everybody's in these things, right? That we know that there's a ton of longs in this thing from Commitment of Traders. I still have that up. Well, let's see here. What's the new one called? UWI? UWI. Is that the new one called? Come on. No, you didn't like it. What am I looking for? Commitment of Traders. Commitment. Commitment of Traders report. That's right. Kevin is also the talent and the engineer and the producer and the director. Okay, so we looked at this yesterday. Their bodies are definitely in the crude oil here. The managed money is definitely in this thing here, so they can't afford any type of rollover on here. They'll start puking it up in a hurry. 52 should be pretty much alarm. But you can see here that there's 56. It's narrowing out here. The bodies, they're trying to push it. What they're trying to do is probably get out of this thing. You keep playing mumbly peg with the thing. You keep, adding chicken shit until it doesn't work, and then you have to cough it up. Because remember, you have somebody else's money. Because it says managed money, right? It's the bank's money. That's how it goes. It's the bank's money. And then large specs are over here too. So they're all long. Commercials are heavy short again. So what happened when commercials are the short? Holy buckets, look at 105 to 26. And you already know I was short up here. Short leaning. It's going to come down. No, it's not. It's on its way to 36. And it got to 26. Bad, Kevin. We're going to take away your award. Whatever. Okay, so they're loaded. 45 is pretty good. Well, see, now here's the same pattern. Here's, say, like natty gas. Natty gas may tell us if we dip below here on the crude oil, right? Same type of deal. Breaks up to the upside, fails, breaks through. We're waiting for natty gas, the greed side, to come down here. Wouldn't that be crazy if oil got under 40, right? Like I said before, just because the Exxon guy is the State Department guy, the key to this one is if the dollar gets stronger, it makes more sense to import oil than to produce it ourselves, right? The oil's at 38, we'll say. Well, we're going to produce it here? No. We're going to produce it? No. We're running another pipeline boondoggle out of Canada, Keystone Pipeline. There are pipelines under Minnesota across all the Northwest or the North Central area since the 50s. We keep replacing this stuff, okay? The last pipeline was from Alaska, and that was 1981. And then the price of oil didn't find a bottom for another 20 years. So history repeats. We're just getting ready for the next time. It's just another CCC project or whatever. And now we're going to use trans-Canadian labor and stuff since the Canadian dollar's down. No, of course not. We're going to have no bid contracts in the United States in the protectionism. Blessed for what they not know. All right, so getting back in line here. Where was I here? Oh, Kevin, that's just bad news when you do this. Nurse porn. Astrocycle. Where's my chart? No, not that one. See, this is what happens when you do this. All right, where am I here? Oh, there we go. Okay, back to this one here. Okay. All right, so like crude, the bodies are in this thing. We just saw the managed money is in here, so watch this thing. But Kev, you've been telling us, and that's fine. Look, get bored, go somewhere else, and then either way, whatever. I still lean with the bodies. It doesn't mean it. Because once the deal is the trigger, you have the opposite side on there. 62. I don't know. That'd cause problem with stocks too. And that would also go along with the dollar pulling back a lot deeper, but we shall see, won't we? Livestock index, same type of deal. Possibly could move up half back, but it's about a third. Strong dollar. Well, maybe we'll get some exports now with the dollar coming back. But this is cattle. Americans eat 3 hamburgers a week. Energy index, same type of deal, back into the meaty area. So what are we at? We're at 2 years of sideways here. Copper. Look at you little bugger. Regular copper. All right, sideways pattern like a coil, blah, 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 exploded to the upside and ran into this previous, its pivots. This would be R1. Here's R1 for the next swing higher, but on a daily kind of came back here. For me, I'm looking at it as more of 161, I'm looking for more 160, 180 than, 320. That's how I'm looking at it. If it goes to 320, then hey, it's going to go to 160. Because we're going to run into a recession, right? Some of this stuff's not going to be too happy with recession. This is what copper's been doing during expansion. Look, it's going down. We're selling millions of homes. 2012, 2013, 2014, 2015. This is just I think this is just the same type of bounce, it's just a counter-cyclical move in a bear market, and a secular bear market. I mean, this is the first really decent, prolonged bounce. in the bear market of commodities. Livestock total return, blah, blah, blah. Just hedge some if you're a hedger kind of thing. Hopefully they'll start pushing beef instead of pork. There's nothing like buying a lot of something. Pork chops, pork kebabs, pork and pineapple, sweet and sour pork, shredded pork, you name it, you know. Pork in a tube, call it bratwurst, knockwurst, neckwurst, whatever. Sassafras wurst, whatever. All right. Heat and oil or heating oil. Yeah. Okay, bomb. Not much interest here, and it's below the happy place here. So the product's kind of throwing me off here. I kind of like the long side of gasoline and the short side of heating oil. Just because. What's this one? This is the spot commodity index in general. How about an ABC pattern and then roll over? Oof. Total return, same type of deal, though. This could be a secondary accumulation pattern and a swing higher. What do we have? So we're talking about the drought and stuff going forward too, right? Yeah. So what do we have here? So we have a bottom in 16. So this one lagged for the whole, but this is everything in general. So I'll treat this as an A wave, a bunch of B wave here, and then a C wave up to here with the drought. This is petroleum, though. Okay, I'll treat it as a C wave too. With up here is gonna for say we get the products to go up and the underline stays the same. Sub-index. I don't know what if kerosene and naphtha and all this other crap is in there too. I just look at the chart. Sideways. What's this one? It's petroleum again. Same type of deal, you know. At most, I'll treat it as a C wave, but just a lot of sideways. Random length lumber. Lumber's come up. So, but we are in the home building phase. Did we ever get it sticky? Yeah, we did get some back here. 12 and 13 coming out of it. Just a thin market. I just avoid it, but it just gives me an idea that there's some demand for lumber here. Because we're going to build wooden ships. Space Tills and Nash. Is there a young in that one? Okay, cotton took a short side of the thing here. You can see the money going into it. Okay, the body's going into it. The previous one, he had 77 to 65. So we'll call that 78 to 65. Or 66, so that's 12 cents. So 78 back down to here, pivot. I'll treat it that way for right now. I think the bodies are in cotton too. Why do I still have this? Oh, Kevin, world production carry trade. Kev, you're not very good at this. Oh. Okay, commitment of traders. What was I looking for? You tell me. Cotton. All right, bodies are in it. 20 years, 3 years. Managed money's in there again. Okay, cotton. Cotton can go limit up, limit down, limit up in the same day. So have fun. Gosh, take off screaming. And remember that this in cotton was because Glencore didn't have their freaking stops in. Okay, this does never happen to kind of thing. That's how I kind of look at it. And we're at the previous highs. Wow, I thought, oh, that's right. I always remember cotton in 40, 50 cent range. So, okay. Gosh, they're in it though. And the commercials are short. That didn't 8 down here. Wow, this will be interesting in the old cotton. Ooh. 75. That's going to be, I'll treat that as a retest 75. So I'll give you 2 cents here. And if it flips through here, then it's like, it goes back through 7. Like, this is an inside day. You get a breakthrough, kind of narrowed here, narrowed again. So we're getting kind of a narrow thing here. Come on, dump some cotton. Dump some cotton, why don't you? Okay. Bloomberg energy thing again. Yeah, just whatever. Sideways. So I look at it, it's more sideways. Cotton sub-index, what do we have? ADX is turning up. What do we have here? The meaty part up in here, 26. We shall see. Oh, the dragon pattern thing going on, doesn't it? I have to keep my eye on that. Cattle sideways. Anti-gas. Okay, what's this? 250. 280. All right, well, I'm aiming for 280 now. I'd like to see it come down. These bodies came out of it right about halfway. So yeah, 280. Try 288. This today, what did we close at? 306. 88, 18 cents. All right, we'll give it a shot here. The green line previously. Green line broke it, kind of held in. Green line held, bounced off the bottom, so that was a buy. So 276, that'd be about right. 274, that's where this green line is. Now the green line was just tagged, this is 2, Natty gas weekly, how about 1 year, right? And we want to undo the logged deal. And that didn't help either. All right, so this green line here is the 276 area. What I was looking for is from the bottom, little green line. Where are you, buddy? Little green line that was crossed here. See, what it is just a reference point. It was touched once before, so touching again is about 76, which is about that 74. See the area right there. Let's see what we have on a daily. All right, so our green line tagged, moved up, it came back down. So what are we at? 295 here on a daily. 280. Okay, what do we want? We want it to come down. That would be nice. What's this down here? 2.25. Yeah, so you can see it. It's just like, come on. But the other side is that, it's wanting to kind of hold the upper area. You're still having a series of higher highs, right? Higher lows. You come back through, but that's the whole deal, right? This is the whole greed thing. Bring it down here, please, You have to have the backside on here. 340, 330, 328, right? 334. Watch your individual contracts because your prices will vary. The BODs are in here though on a daily basis. There was your sell. That was your on-balance volume there. Ta-da! Yep, come on, you. Second to last chart. What are you? Natty gas, right? Livestock. Okay. Industrial metals. This is going to include nickel and all that fun stuff. Back about into the mushy area here. So about that for now for industrial metals here. See how things kind of pan out. It does have that look like Natty gas did when it made its high. Right? I mean, if the project's, we're going to do this, somebody can just calculate how many tons of copper we're going to need, right? They've already plugged it in. We're going to need this, and go out and hedge. Then come and make your bid. Then lose. It's kind of like when Caterpillar, all of a sudden Japanese heavy machinery was coming in. Komatsu or something, whatever. People get really bent out of shape. Eat your imported car. I remember those bumper stickers from the 1980s. Eat your imported car. All right, what do we have here? Gasoline. I guess I could kind of swing it as an inverted head and shoulders, but I'll deal with that. This is the bottom 90 cents in gasoline for now, and And then there's swing here when things heat up or whatever, but I'm still gonna lean that this is just a larger sideways pattern here. Looks like the bodies want to come out of it. They've had enough. Total return again. ADX and all of these. This is average trading range ADX and Bollinger Band width. So the whole sideways is, of course, is ready to explode either up or down. And this is total commodities. I'm going to say commodities will be out of the favor here over the next few years until we get the real estate cycle just overheating again. I bought 10 homes with only $10,000. Just $1,000 down got me a home. I own 10 homes in Las Vegas. It's, okay. 5,000 people a month showed up there for that party. Corn. Gosh, corn's a long sideways pattern coming up against the cloud. Well, this goes along with wheat and all the other ones here, though I prefer it to be $1 less, but you know, you have to go with what you get. It's a large sideways pattern walking into a drought, so I have to, you know, but the deal is it's the last 6 weeks. So from about March on, you'll know if we're in some sort of kick-ass drought or not. I'm hoping that we come back down to here. That's what Kev's hoping for in corn and wheat. You can see how it's below it and bodies are out of it. So I like the wheat. It comes down, we're back to this game again. You know, $4 times $5,000 is 20 grand. So you need, you know, 22 in here, all right? 22,000 for the full amount, or 420 times 5, whatever, 21 grand for the total amount. So you're playing that every dollar higher is $5,000. So it's 25% if you put in 100% of the margin. Total contract value. You know, and if it drops down here, 360 times 5 is 18, you know. So here's a $3,000 loss. So that would be basically your margin on this stuff. You know, you're on call a couple of times if you go in minimum. But the deal is it's pointing down, 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 and I'm trying to establish something again on here because eventually it'll spike up. Yes, we're waiting for a washout. We're waiting for people who want to buy over the counter stocks and not commodities anymore. Beans, oh, come on, you. You want to do it, you know you want to do it. Come on, what's this? 836 and 660, 604. Oh, aren't you just a funny number? Because there's no 04. All right, trend line underneath this one. This is kind of a pretty chart. And we do have that little triangle thing going on here, but I'll poo-poo it. I'll say we're headed this way in beans. Get the bodies to come out of this and just puke it up. Yeah, that's all it takes is one great, oh, the fields are looking great, and just kick it. CAD and $88 sideways action up this way is how I'm leaning from the previous low in the mid 80s. So another Canadian dollar. Don't stop sneaking those things in on me. Is this US CAD? No, this is just CAD up, right? Okay. Dollar. All right. So we have the dollar from the bottom, 12 here. 14, that was, you know, took care of, that was it for the interest rates deal on the reality side. And this is where the herd began to go, hey, we're raising rates, yet the market already took that in account 3 years earlier or whatever, 2 years earlier. Yeah, the herd's just a little late to the party here. Kind of like why I'm looking for an area to unwind the whole dollar blow off here as we raise rates, jam the economy into a recession. What do we have? 1, 2, 3, 4, 5. Maybe a 5 of 5 on the way up out of here when they start hiking. Because the whole drought thing, we get a bumper crop this year, we'll say in 17. Things are good in 17. We'll just say things are good in 17. Commodity prices crater. Well, that comes down to your input costs, right? So then all of a sudden, then the following year, then the stuff quadruples in price or doubles, whatever. That would be inflation, and they can jack it up. You know, that'd be 18, 19. And that'd be just in time for the old recession. And then we have the election in 2020, and Trump's like, and then out you go, just like Bush Sr. Bush the Senior. What do we have? Beans sideways? Oh, you buggers. Yeah, one thing's for sure, it's sideways narrow. It's either going to go higher or lower. I need to make these monthly. Agriculture, it's easy one to watch. So many charts. Corn subindex, yeah, drop, 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 drop. Grains subindex, that probably doesn't have. That'll probably have like oats, but not legumes. Same type of deal, but even weaker. Fund this. Ooh, no bodies are in it. What do we have on here? 19 to 21. I'll pass. There are no bodies in it, probably just no interest. That's also a tell. Prefer the bodies to be in it to get a washout. Platinum, see, the bodies are out of it. So that's why platinum 1125 and 1350, like a C wave, but just we may only get to another 100 higher from the 100 lower here. So I'll treat this as, an A, B, and then some sort of C wave here. What's this? Agricultural. No, you're actually higher. Oh, that's eggs altogether. Okay. All right. So I need to put the DBA with that one. British pound, double bottom. Let's swing up in here. 131.71. Do I think it's going to go here? That would cause some consternation, wouldn't it now? I'll say that the 31-year low is holding for now. I need to make monthly charts of these subindex here. 2 hour. How did you sneak in here? Wheat 2 hour. Oh, okay. Double top. Oh, okay. All right. That's a pretty looking chart there. Little pink dots. So this is a 2 hour sub wheat double top. So we need to drop it down into here. What do we need here to lose it? $7, 7.42 to 7. 7% drop. Oh yeah, it's just a 7% drop. Okay, what is this one? 2 hour on this one, daily. So these are kind of nice. What's this one? Sub-wheat index again. So that's a 2 hour. Okay, so this is on a daily. Okay, so this is our double top we looked at. We got the whole sideways thing again, calf. Well, it's going to break out one way or another. EDX, yeah. These are ready to reset. So we're going to get something here one way or another. Yeah, I'm going to need some partners here. You two watch this. You two watch this. You two watch this. And I'm going to go fishing. Text me. No, my thing will be going beeping and farting enough anyway. All right. Aussie dollar, you bugger. Sideways, low, commodities swing. Counter seasonal because they're in the southern hemisphere. 83, well, that'd go along with the Canadian dollar, but then that'd go along with oil breaking out too in a reignition here. Now we'll see. New Zealand dollar. The whole thing with the New Zealand dollar is eventually it'll come back down this way. That's how I'm looking at it. Here you watch the Kiwi. You like to get up early in the morning. Kind of like in the Super Bowl. Got to turn on my charts. All right, what do we have? 1, 2, 3, 4, 5. Sugar index. It did sugar to have a good move on Friday though, but man, I tell you, this is deep pockets and a lot of sitting going on here. Oh, now this one looks prettier. What do we have here? Sugar continuous. This is the sub-index. So the sub-index is kind of stalled sideways here, but if that's the bottom, we'll say that's the bottom. So here we are with sugar retested the breakout, and it's holding. So what's this up here on sugar? Okay, if sugar cracks the previous highs up in here, the angle of ascent should increase. And this is also a logged chart, so this is easy to watch. I'm throwing the Heiken Ashi bars. They only had a couple of weeks of like, So the red held, right? No, we poked through it. So we'll call that a buy. Here's a yellow. 22.6 on the yellow. 22 cents, 22 and a half. It's the yellow. All right. Wow. Swiss franc. You're supposed to get to 102 and a half. Kind of slowing down on me, buddy. Oh, look, you jabbed through. Go from one end to the other. That's why you're talking about 106 calf. Things would get ugly, remember? 102 and a half is what you're looking for now. Unpeg. Softs. Stretch it to an inverted head and shoulders. You're gonna have to get softs involved. Well, we'll just leave it as that's a bottom, and then we're working on the sideways here. Soft subindex, same type of deal. Inverted head and shoulders. Bean oil. Back into, jabbed through, couldn't hold it, so now in theory it's supposed to jab through the other way. 38, 33 cents. Wow, bean oil get into the 20s. Pick up a phone and call your broker. Pick up a phone. I don't know their 800 number if my computer crashes. What are you talking about? Silver. Oh, look at you. Where are you at now? Oh, here you 20 to 24. Well, we're at the cloud here. We're above the meaty area of for right now. For what do we have? Head and shoulders here. 18 and a half. So that was the low ABC pattern. 19, 18 and a half, 19. Yeah, I wouldn't. Another buck or two, maybe. It's kind of how, buy and write options, and then wait, at some point switch and buy the puts. If they're going to spin this here as whatever, industrial and inflationary. Dollar's coming back. Once the dollar, dollar swings the other way, then what do you have? What do we have here? Precious metal index, same type of deal. Just probably, banged off the top here, comes down, If we get some sort of failure coming up here, then it's in trouble this way. Gold. See, gold with the cloud. It's a little over 13. Some lines in here. 1232. You're playing it for about every 6 to 8 bucks higher here. You just take a look at some numbers where it'd be support and resistance levels previous past. So what's this here? 1232. Yeah, green line 1232. We'll see, huh? The bodies are going to run into this. So as soon as it begins to get goofy, then start looking to maybe doing puts into, say, like 2019, 2020 kind of thing. So we shall see. Precious metals subindex, basically the same thing as I screen past these. Total return. Japanese yen, come on, the higher it goes, unwinding. So the yen to go along with the dollar, to go along with interest rates, to go along, so the higher this goes, the more of the carry trade gets to become painful. So they have to unwind their short position in debt, the short position in yen, the short, long position in, that's it, short position in gold, if strong dollar, weak gold works in one currency, it's going to work the opposite the other, right? Strong dollar, short gold. So what? Long yen, long gold. You know what I'm saying? Right? It's just that simple, people. Coffee. No. Bodies came in here 176. There's going to have to be deep pockets and kind of stuff if you want to just the whole. I wouldn't play the short side, but you're going to have to be careful on this one here. Yeah. Let's see here. Coffee subindex at the lower vestiges here. So thank you, Mr. Bloomberg. Cocoa, well, you have a screaming ADX basically told you we're in a weekly trend. Look at these little nice red Heikin-Ashi bars. Not once did it spook you and go, oh, look, it's a green bar. Heikin-Ashi used moving averages, right? So it's just like, no green bar, not to spook me, not to spook me, you know. ADX is screaming, that's the only thing. So it's susceptible to a bounce. Here is, what's this, MACD? MACD is coming down. So it's just one of those where we just trail it behind it. Wouldn't that be scary, huh? Yeah, it would. 1800, 1400, not a problem. Been there, done that. I've been in there at around 900. So, yep. Screaming ADX. So we do have a persistent trend. We're just waiting for it to bounce. I'm trying to snag some of that right now. So, okay, I suppose since this is the last contract, we can look at it daily. Banging around. Not the unbalanced volumes come out of it. You just stop yourself in here. That's all you got to do. Stop yourself in. Let's see. What do I have that's close by? Natty, we looked at that yesterday. New high money. Currencies, India. Monthly. Oh, I mentioned I wanted to see monthly. How badly are these? Oh. 4 pages, we can whip through them here. So this is a Canadian dollar. So an A, B, C wave higher, 80, 86 for the Canadian dollar. That would go along with. So go back. No, I need to go back to quarterly charts. This is the bottoming process of the secular bear market in commodities, 2002, 2003, and then la. So eventually, though, I do think that it'll work its way back down here. But this should hold for now, 68. Wow, how about a big A, B, C pattern here, Kevin? The Canadian dollar takes off. That would be some scarcity. That would be that'd be quite painful. That would go down the lines of stagflation, something fierce. That's right. We have world productivity dropping for the last X amount of years. Commodities take off. That would be hilarious. Stagflation right now. Oh, that would mean I'd be able to survive another year or two. Everything I have just goes up in value. Well, on paper, right? All my physical assets, right? That's how that works. Well, something that has intrinsic value goes up. Your home, and the numbers go up. You know, it's just basic pure inflation. You know, the home, you know, what was it? The 3-bedroom Ramblers in West Bloomington were 30 grand, 40 grand in 73, and then stagflation hit, and all of a sudden now they're, 6 times kind of thing. Same type of deal. Wonder what would be awful for stagflation. Stuff that doesn't have any value. Stuff that doesn't exist. Oh, Kev, stop it. Quit beating on the Bitcoin people as you quit it. Kiwi here. You can see, here's Kiwi 09, 49 cents. It was even, why don't I get, man, another decade goes by and your charts are all messed up. Okay, here's TNX. So this is as this goes higher, your 10-year interest rate goes higher. We're at 2.5 right now. All right, this is the bottom Brexit type deal. This is the bottom in Brexit. I think we're in a 30-year upswing in interest rates. 5-6% up in here. We're just making a bull flag until we go higher, basically. Like I said, while stagflation would go along with all the baby boomer money that they collected from their parents post-reset depression, and then that's passed to their kids who are up to their eyeballs in student loans, and then they go out and spend it indiscriminately. That's how that's going to probably play out, or inflation. Yep. 1 decade, they're selling you $25,000 life insurance policies on TV, and then the next decade, it's a standard to get a $2 million policy. Could you imagine what 60, 70, 80 million people at one time over a 15-year period start, they collect a $2 million policy kind of thing. I don't know how many there are out there, and I don't know if the insurance companies are going to pay. You know, that's one thing that they have a tendency of not doing. How many, 4-star, 5-star, 2-star insurance companies do we have left? One. I think MetLife was the only one that made it through the Great Depression, right? Here's 92 on the dollar. Where are we at here? Okay, so we poked through. I did talk about 90, though. That would cause, what we do is we do run into something here, that the dollar falls off. That would be with lower interest rates, like something stalls here, whatever, national train workers strike, something, whatever. Truckers all say BS, you know, whatever. And then everything halts. And people run scrambling. It couldn't be anywhere too. They can run into American paper, you know. Hideout, we saw that in Eurodollars and Fed Fund futures, T-bills and stuff. What are we down here? Correlation between the S&P and rates. And what are you? The dollar? So the dollar correlated to interest rates is 75% and about, what's that say? 32% for stocks. So as the dollar went higher, stocks went higher and rates went lower. No, TNX, yeah, opposite. Yeah, right. Yeah, lower rates. Yeah, lower dollar, lower rates, and lower stocks. The correlation. So opposite correlation. Okay. Yeah, lower, higher, lower. Right? No, where's my helper? Where's my STEM person? Get over here. I'll take a look at this here. Don't give me this. It's either up or down. Let's figure that out, right? Yeah, it's down. Correlation's 100%. So this is down. So this is up. So the correlation is 100%. So as the dollar goes higher, interest rates go higher. As the dollar goes higher, interest rates go lower. Right? Or is it TNX? Yeah, right? TNX is the rate, yield. So yield, okay. Yield goes down. Hold on, that doesn't make sense. Oh, this is Brexit. That's right. I'm screaming the other way. Okay. Brexit. China and Brexit. Okay, that's right. Wow. So they went running into the dollar and it scared the shit out of them. Okay. There, I'm glad we solved that. STEM person, you're fired. Oh, bad Kevin. Stop it. You're just a bad CEO. All right. No, I keep the STEM person around. Get over here. Summation this thing for me, would you? All right. So we have a breakout. I'll treat this as a retest here. Meaty part is about 97. Then I'd start kind of focusing that way on the dollar. I don't think it's going to come. If it does come down here, we're going to have some serious issues. Because that would mean, as we learned, if the dollar comes off and stocks come off and interest rates come down, right? Yeah, dollar comes down, stocks come down, and interest rates come down. These will have a strong correlation, just like they have now. If it comes down to 88, we're going to be in some serious problems, which is fine, because that's, I'm going to say equities won't like it. The economy kind of, our little recession that we're planning for in, 1919 and 2020, and one time Charlie out of POTUS comes early, that would be quite the deal. Well, let's see, 1990, 89, right? 1988 was the drought. 1989 was the double peak with stocks, and then we had to go do the world famous, go to Kuwait and do Gulf War I. And we couldn't get out of the recession fast enough to save Bush. All right. And gave us Clinton and the internet and a balanced budget and a stock market where Uncle Sam is a 30% partner. You too can balance the budget. Create a screaming bull market. Capital gains. Teach them all how to day trade so they're all short-term cap gainers there. and then jack up the rates because you're going to get it anyway. What's this? What's this? Crude oil. 61. This is our trend line from 26. Whoa. So what do we need to break 50 here, huh? Traditional. This is what a point and figure looks like. This is the crude oil. The crack here was at 41, 42. You're to be long. This is your trend. So technically, until crude oil cracks through the blue line here, 49, we'll call it 50 because you'd have to have some zeros on here. It's reversal 51. It's still up. Little computer says 61, but they tell us not to believe it. But we are getting a lot of sideways pattern here for a count. See, sideways pattern is your count, and just count your bars lower. That's what the computer's doing. They're counting these bars and they're going, we're going up to here. It's like, F you guys. No, you're not. Oh, yes, you might be. No, the bodies are in here. Is this monthly? Oh, weekly. Great. Weekly crude oil. Bodies are in here. What did we crack before? 52 to 42, so it lost 20%. So 20% drop here would be $11, which would be 44, and I'm looking for 45. That'll be fine. 35 would be even cooler. Wow, that'd be kind of a scary thing. Crude oil. So what would happen? We get into a trade war and everything freezes. What was that? Remember the strike at Long Beach, Kevin, and all that food and stuff went to waste out long. Same type of deal. Everybody puts on the brakes. Yeah, you disrupt trade. Everything, right? We're just in time economy, right? So the slow boat from China, or if it's overnighted, yeah, that's all you have to do. Just have dock workers strike or something, or whatever. There you go, pipeline break, and you can't fill up the tankers. And you disrupt just like the tsunami in Japan. It shook everything for about 6 months or so. Well, I suppose. Do I feel a tsunami coming? No. Actually, the air is quite cool, crisp, and revigorating this morning. Crude oil again. Oh, this isn't monthly. Oh, that was a monthly. Stupid Kevin. Kevin, this is not Canadian dollar, but it has the same pattern. Oh. No. Well, 55. 94, and this was the bottom. So what did we get? 13, so we got a double. 52, we already got our double. And it came down for the blow off of stocks. Money has to go somewhere. And if your oil's going this way, you're definitely not buying oil. You're putting your money in the NASDAQ. This is 97, 98, 99. 97 was the long-term capital management hedge fund blow up with their 2 Nobel laureates. And then 98, Russia defaulted on its debt, sovereign debt, and devalued their currency. That was the bottom. So let's say 1065 on oil. And we tripled in price the following year to 2000. And that basically got people interested in commodities. Yay! And here's where I wrote about $60 oil, and they're like, what? That's 150. Now, what's this here? 55. Oh, bango, comes back into 47. That would work. That pattern would work here too. What it does is it pokes its head over the high and then comes back through, and I get it to come back through here. Here's 55 and 55.67. Here's 55.24. So it goes 55.67 and comes back through. So we poke our head through and triggers whatever short covering, or the hedge funds go, I got to get out of this. Drops to 40. Did it again, poked its head through, and then 47. Then it went on to 70. Oh my God, Lordy. Manipulated markets. All right. Aussie dollar. 77.50. Yeah, see, here we go. Monthly, right? Yeah, Aussie dollar, 47. I told a friend she could go, she was accepted, she tried to get to Cornell and stuff like that for medical school. And I told her, I said, hey, you were accepted in Australia in Sydney. Go to Sydney because the Aussie dollars at 40, it was whatever, 50 cents, I told her. You know, she's a girl. 50 cents. 50 cents, right? Now she's a doctor. They deal with CCs and stuff. I'm dealing with cents. You know, how do they relate? CC, cents, hundreds, whatever. So I told her it was 50 cents, so it's 50 cents on the dollar. So instead of paying $30,000 a year for medical school, you can pay $15,000 a year. And then I researched a little bit deeper and found out that Sydney is a sister school to Cornell. So you spend all your time down at Sydney, and then you come back and you graduate from Cornell. Yay! Right? Both her parents worked at Mayo's in Rochester. All right, so that was that. That was Kevin's little. She said she got there, and I converted all my money into Aussie, and I'm like, yay! You know, gosh, huh? Well, I'm glad you get to go to medical school for half price. I'm glad I could help. When you come on out, we should learn how to play. You can teach me how to play doctor. All right. It turns out that she's a proctologist. No, Kevin, stop it. No, she's not. No, she wasn't wife number 3 either. You know that wife number 4 hasn't been born yet. I hope they call her Natasha. All right, back on track. Aussie dollar, whatever, the blah, blah, blah. I'll pass. Bangs at 82, 80, 82, you know, that kind of thing. I'll pass. British pound. Oh, look, I can only go lower. I can also go higher. ADX is screaming on here on a monthly, so it should turn down here. That is ADX, right? Yeah, ADX. MACD on a monthly, that kind of thing. So we're trying to bang on some sort of bottom down here. Goes back to 94, 95, 30, 31-year low. I mean, just, you know, look. Euro. Possibly a flag up to, I said about, here's 112, maybe 111 on here with the dollar. Oop, we bounced through the lows down here, so we should swing up in here, maybe 113, but don't press your luck kind of thing. Because we're working, the angle here is the dollar, not Europe. Swiss franc, so we definitely want Swissy to come back down here to 67. So 102, you know, you're looking for places to whack this when it comes back through par again. Sell this thing off. Bring it on down. What's that, 50,000 pips? Yeah, I think you can pay attention. What? What did he say? Maybe his math is bad. 500,000 pips. Get with the program. Let's take a look at that chart one more time. So here's Swiss franc, right? This is before the commodity takeoff. The commodity takeoff. Yes, the Swiss. And then we're unwinding the commodity thing. Whee! That's what we're looking for, folks. Brent crude. Maybe a poke through. We got 60 something. Yeah, that's the hard swing. Whee, Crowder. Yeah, see about what's this up in here? A little under 6. We're at 58. We're 60. Come on. Well, we'll see here, won't we? If Friday's action holds or not. Canadian dollar, like I said, swing higher. How many Canadian dollars do I have? Go. Doesn't go back any farther. Coffee. Okay, here's a good one. Coffee. O2. What? Coffee? Bodies are in it. And there's bodies out of it on a monthly, but on a weekly, they were in there. Look at that. Bodies, monthly. Wow. I'd have to say, okay, if depending upon if I'm doing this or not down the road, you know, my little venture here as a navigator. If coffee does come under $1 into the recession in 2020, look to, bet the ranch. Remember, this educational video is brought to you by, Deep Pockets. All right, so yeah, anything under $1 into here in the recession, I'd look to get into the coffee deal, right? You have to be able to afford 20 cents. How much is that, Kev? It's $37.50. That's in thousands or in hundreds. 3750.00 on coffee. Right, per penny. No, per dime. So it'd be 75 grand. I think my math is right. 75 grand. Check it, double check it. That's why I'm the navigator. You guys have to figure out your own risk management. Because remember, I fired my STEM guy or girl. What? You get them back in here and you program all of this. Yeah, I'd definitely go again. They do have volume and stuff and options in that, so I'd probably go after the puts. But Kevin can go down to here. Well, then just be hanging on to dear life. 02, so this was the bottom of that recession, capiche? Which is, I think, Italian, right? So here, recession, same type of deal. Slides in here, comes sliding down to 80 cents in 2000, whatever the recession is. But you can tell that there's been some stops along the way. I'll take it. You'll see, trade it day to day. Learn it, live it, love it. Coffee, the most traded commodity on the planet. People eat 3/4 of the planet eats rice a day, and water is the #1 consumed commodity, with concrete second. Coffee is the #1 traded. Copper, I want you back to here. You get back here right now. Everything else, oil and everything else came down here, so why not you? So I just look at this as a bear market rally, and then bring it on home. Bring it on home. Corn, so you can see where I grew up watching grains and stuff. So of course, now we have a new happy area. So I want to see it come down here so I can go, yes, I can buy. What's that? Corn is at a 20-year low, 25-year low, 30-year low. You betcha. I'm all over it. Bring it on home. What's this one here? 10-year low. 10, 12, 15. I want to hear it. Get me on board. There's still room more to run on the downside here on the corn. That's what we're looking for. Or I'm looking for. You, Gazelle, Batman, they're in here. Definitely in the cotton. Watch that cotton. Cotton like beans and like everything else. As soon as they pull the plug, it's just going to be awful. Or if it goes the other way, they're going to pull the, what do they call that? Stagflation, Don't worry, it was, there's one. T-gas. Bodies came out of it. What is here, 5, 7? So we're shooting for this meaty point here. What's that, 6, 750 and T-gas? I'll take a look at it. Regular gasoline, between $1.40 and $1.70 for now. Gold, like I said, maybe just an ABC pattern, either this one or that one, and then you'd have a larger second area distribution and then a rollover. Somebody's following me. Oh, that was a good song. Somebody's watching me. Whoa. Michael Jackson was in that audio, wasn't he? Recording. Heating oil. More bodies ran into it and took it up to the shed. $1.10. $1.15. All right. Okay. Light oil we looked at. Natty gas. Yeah, we're at pivot. The bodies are in it though. Bring it down. What's S1? 226. I should just keep my mouth shut. We shall see, won't we? Because you're gonna have people buying. They bought the pivot before. They, here was where it held the pivot, but it started, it dropped onto the pivot, it dropped onto the pivot. This one just kind of like, it just kind of started. Yeah, 280, what is it, 282, 288 area for Sunday to see if there's some support. And then you're down to 274. And on the flip side, I just test this as just a retest for now, but see how it pans out here. So you may have a reversal. And off to the races, right? The angle of ascent would increase sharply. I like these here. I don't know. It's a sunny day today. Palladium. Look at that, palladium, $100 or $125. Maybe distribution here. Yeah, in a recession, it should roll over. Yeah, maybe platinum. Platinum has a swing here too. Palladium, maybe watch palladium for recession. What do we have here? 2000, 2001. So this ran up to it. Ran up into it and rolled. Okay, so maybe we'll keep an eye on palladium for the recession here. Platinum looks like a swing up into here at 1350 maybe. Bodies are out of it on a monthly basis. That's a pretty strong signal. Agriculture, poppycock. Bring it on down here. Come on, lighten my risk here. Woo. Stop farting around. Yeah, bring it down. Commodity in general. Bring it down here. Gotta be tempted. Come on. Well, we're definitely gonna know. Just stay alive for the next couple of years. Because it will be a party, and then it'll be put on hold again for 4 years. Some sort of big party in commodities, counter-cyclical, about 3 months or 6 weeks to 3 months in Partyville, and then it's dead for 4 years. Yeah, just have to stay alive. Livestock down here, right? So yeah, livestock. Ugh, filthy animals, but they taste delicious. Precious metals, we all know about that. Come on, just a swing and then a rollover. Kev, what about a big flag thing here? Well, okay, you have to get it above here, or actually get it above here, or below, get it back below pivot, or back above R1, or you just have some sort of, this whole thing is a secular bull market. Now we're in a secular bear market. Gold's been trading down for years. Then we get a bounce. How do you know it's just not going to continue to collapse right here? We shall see. It has to do with the dollar and interest rates and all that fun stuff. Here's silver. Wake me up when it's at, what's this, $7 again. 7, what's down here, 5. I'll start accumulating again. That's where my interest lays. I'm not interested in swinging up here. I'm interested in hoarding for 10 or 20 years. Teach my kids to do that. Just buy it now. Trust me, you'll love it later. It's shiny. You can go into art class at the college with your 10-ounce bars that you paid $50 for, and have somebody go in with you when it's $50 an ounce. And so here the bars are $500. Who all wants a chunk of silver for, part it off, man. You buy it for $50 an ounce and go to college and take a lapidary or something. You make jewelry in that, then you just chunk the bars off. Everybody gets 1 ounce for $50. There you go. Beans, bodies are in there. Here they're in there again too. They are. Come on, just slaughter. Oh man, that's 20 grand. Beans roll over here. It's $4 or 20 grand. Half of this is 10 grand. Margins like a third of that or so. Now, if you put in, what about on the other side? Well, we shall see. I'll have to put some trend lines on these. These are kind of nice looking charts. Sugar. our bodies are here. Or this is monthly. 1999, 4 cents for sugar. Yeah, they definitely could take off some of the price supports on this stuff. Just go free market, you know. You guess. Monthly is a little too erotic. No, it's erotic. That would be funny. There was a guy that I'd listen to, and he'd say stochastics wrong. Erratic. Yeah, this is. I'll just you guesses there. That'll be my subliminal. There's my sub. If I like it, I'll say no, I don't like it. It's too erotic. Everybody's going. So I listened to an hour of this, and that was his best joke. All right, wheat. So you can tell. Want to get into this thing, you know what I'm saying? I'm not saying we're going to get this. I'm just saying, you know, a buck or two would be more than happy kind of thing. All right, that's the end of that story. I'm going to let you guys go and work on some other videos. Take care. Have yourself a wonderful Super Bowl Sunday.